Hi everyone and welcome to today's morning report on Monday the 29th of February with me, Rich Perry, market analyst at Hand Tech Markets. The open trading session's got off to a bit of a negative start really, and that's sort of come on the back of that down move into the close on Wall Street on Friday, but also the fact that the G20 at the weekend didn't really do a great deal again. They sort of make all the right noises, don't they, talking about the need to generate growth. But also the fact that there seems to be a bit of a sort of discord within the G20 in terms of how monetary policy is being initiated. Obviously, the ongoing moves towards negative interest rates is a sort of a move, arguably, towards currency wars, and that is sort of a bit of a bone of contention in the G20. But the usual noises of sort of like fiscal policy being used and also structural reform, etc., etc. It's just words at the end of the day, and it doesn't tend. I mean, it's been saying this for years, haven't they? So the proof's in the pudding, and well, we'll see if it happens. But the markets have sort of taken a bit of a weak standing today. You've seen some weakness in Asia overnight. Interesting that we've got a bit of a safe haven move. Let me just show you the 2-year Treasury yield first of all, because you had a sharp move on Friday. Again, the PCE higher than expected. So inflation is picking up, and that comes as in the States, and that comes as the employment data continues to improve. So, I mean, all things remaining equal, that should put the Fed on the path towards tightening. The sort of chances of a March tightening or March interest rate hike are 15%, or so about 12 to 15% at the moment in terms of probability, according to CME FedWatch. So it's highly unlikely, but still, it's interesting that we're getting this data picking up, isn't it? This comes as the dollar is strengthening. Those yields picking up, dollar has strengthened, hasn't it? And that's interesting as well, because that is certainly having a big impact on the euro, on sterling. Not quite yet pulling through on dollar yen, but I'll talk about that in a bit. It is having an interesting impact on the markets. The Chinese yuan is weakening again. It's on a weakening path in the last couple of weeks, and that is certainly having an impact on Asian markets. The Chinese equities are sharply down again today, and that has sort of drifted into the European session as well, that negativity. So all this safe haven drive that we're seeing today is sort of on the back of sort of a combination of things really, but no major specifics. Also, oil price is just slightly lower, just under 1% lower on WTI. Nothing too significant yet. So what have we got to look forward to today? Well, we've got the Eurozone inflation. Where is it? Here we go. Eurozone inflation, not that chart, this chart. At 10 o'clock UK time, that's expected to just come back to zero, actually. You had the disappointment of the German inflation on Friday, pulling back to zero. Eurozone inflation is expected to do the same thing. On the core data, it's expected to come back to 0.9%. So that's at 10 o'clock. Then you've got the US data, a bit of housing data, pending home sales at 1:30, and that is... Sorry, no, it's at 3 o'clock pending home sales, and it's expected to come in at plus 5% growth on that number, so slightly improved on last month. And then a couple of other things actually. We've got the Chicago PMI at 245, expected to come down at 53, and also the Dallas Fed Manufacturing Index. Now look how negative that was last month, so the market will certainly be paying attention to that. Another regional Fed survey that shows significant concern, I think, for the manufacturing sector in the States. But that is at 3:30 this afternoon. So my chart of the day is the euro yen. Now I sort of looked at euro yen on Friday, and I thought, well, this has got a nice reversal, hasn't it? And ultimately, it has completely turned around again today, showing quite a long way out. This is sort of about 9 months or so, and you've broken out below that downtrend channel, and not only that, interestingly enough, that downtrend channel is now the basis of resistance. But this is a morning doji star, a pretty good one as well, but has been completely and utterly turned around by a very sharp downside move, 1.2% lower on the euro yen today. Really sharp move. And that just suggests that the selling pressure is still there. Now, the old support is the old supports are basis of resistance. 125 was an interesting pivot on Friday, and that came in on Friday. As I said, old support became new resistance, hit there and fell away. We've got another pivot band forming for 124.20, which is the highs that have turned into the lows. So that's old support becomes new resistance, so watch out for that 124.20. But looking at this chart, you'd certainly say that the outlook is once again deteriorating. Had a slight rebound off support, which was coming in around that sort of 123.40 area. Rebounded early today, but it's just fallen sharply again lower, and it's now sort of looking like it's going to be testing this sort of minor pivot level here around 123. But the key lows at 122.45 area certainly could come back under pressure again, and that would be that sort of low from Wednesday last week again. So really sharp turnaround. Doesn't look great. That yen strengthening just suggests that there is still an element of fear in these markets, even though sort of the oil price has gained, the metals prices have gained, the yen is still a strengthening currency, which is, as I said, a bit of a worry about the outlook generally. But I wish you good luck in your trading today, and I will speak to you later. Thank you.